Welcome. My name is Ryan Castle. I'm the CEO of the Cape Cod and Island Association of Realtors, and I'm here with Charlotte Green, who's the residential sales manager for the Cooperative Bank Cape Cod's mortgage division. Charlotte, so what is the Cooperative Bank Cape Cod? What do you guys do, and what's your mission?
Well, the Cooperative Bank of Cape Cod is located here on the Cape. We've been here for 100 years. Lending and doing depository operations for people who live and work on Cape Cod. Our mission is to be an active part of the community, to give back, and to create a positively different experience for people who are working with us.
And you guys are so involved in so many different organizations, including the Cape Cod and Island Association of Realtors, and are such big supporters, and really just stand up and help out anytime we need anything to help the real estate industry as a whole. So we just really appreciate that help.
It's a really important part of our mission, Ryan, to be able to give back to the people within the community, especially the real estate community, who is really pushing forward development and growth here. Anything we can be involved in, we're happy to do it. Giving back is a huge part of our mission statement. We're Cape Codders, we live and work here, so it's important to us to give back to that community and help it be a vibrant place.
So talk a little bit about, I think, most consumers, when they get started in the lending process, are confused, right? Talk about, I want to buy a house. I don't have the money to buy a house with cash. So what do I need to do? What am I looking at?
Well, the first thing I encourage people to do is ask questions, ask lots of questions, and do not stop asking questions. Part of the preliminary steps are going to a lender and getting a pre-approval letter so that you know exactly what you can afford by a lending standpoint, and then align that with your own personal budget and taking into account the out-of-pocket costs, the monthly costs of owning a house, and the additional costs that go with it.
Like ballparking, how does someone kind of first determine what they can afford? Is there a good rule of thumb to go by?
A good rule of thumb is looking at about 30 to 40% of your gross monthly income should cover all of your monthly debts, including your housing payment. So we have a lot of people who are renting currently. We use that typically as a threshold of, is that a comfortable payment? Can you go up? Would you rather go down in your total price?
Yeah, and when I come to you, there's different lending programs, different kinds of loans that have a vastly different amounts of down payments. It's definitely not the old school 20% down that we once thought it was. You talk about the different kinds of loans and what I should be looking at when I evaluate the kinds of loans that would best fit me.
Certainly. So, like you said, there are a variety of different types of loans. One of the most common misconceptions I hear amongst people, age 22 to 82, is that you need 20% down to purchase a house, and that is no longer the case, especially in the primary residence field. You can put very low down payments, and then buying second homes and investment properties. Still, you can be under 20% to a little bit more depending on the type of property. So it's important to speak with an experienced lender and really let them know what your needs are, and that will help them narrow down all of those loan programs to find the best fit for you.
And so, because there's what's called government backed in our language, which is like FHA products, Federal Housing Administration loans, VA products, rural housing loans that a lot of places on the Cape surprisingly are eligible for. And then you have the more traditional conventional loan products that are backed by Fannie Mae and Freddie Mac that people talk about. And then there's another thing called jumbo. Can you talk a little about what jumbo means?
Definitely. So there are what's called conforming loan limits. Those vary year to year. And anything over that loan limit will be considered what's called a jumbo loan. So there'll be different financing requirements, typically a little bit more strict, a little bit higher down payment requirements for that.
And in Barnstable County, that loan limit is like in the high 400s, right?
Correct. It's around 483 currently as of 2019.
And then the down payment on top of that.
Correct. So you can back into, that's the threshold, not for the purchase price, but for the loan amount that triggers what's a jumbo loan. And then anything below that's going to be a conforming loan, and that's where most of your government loans fall into as well.
So I really think, look at the loan process as like really three different real choices you have. It's what kind of product you're going to use, how much down payment, within that product is minimum, but also how much I want to put down above that, because I'm sure you encourage more down payments than the minimum required for that loan product. And then third is interest rates. And I know both those first two play into that third, but if I go to you versus some of your competitors, do I get the same interest rate everywhere?
Interest rates are going to vary depending on where you go. They'll all range relatively similar within maybe half a point. So you want to take into consideration the interest rate, certainly, but you also need to take into consideration the difference in product. So a different product's going to have a very different interest rate. An investment purchase versus a first-time home buyer, primary residence purchase would have very different interest rates.
You guys are a bank. There's also mortgage brokers and mortgage lending companies. What is really the difference? And then should that be something else that I factor in besides those other three things I talked about?
The difference between the three are really the source of where the money comes from. So a broker is going to multiple parties to shop your mortgage and look for a good interest rate. They're really a middleman between the decision makers and you as the consumer. They have sometimes more options than banks, but what I've seen lately is a lot of the smaller local banks have expanded their lending options to be able to compete and offer the consumers that they're serving a variety of loan products.
So what's the advantage of a bank, I guess, in your case, because you're lending your own money, of your own deposits. What's the advantage to that to a consumer?
So a local bank who's lending their own money definitely has some advantages because their underwriting is done what's called in-house. So it means we're making the decisions, our employees are making the decisions. So we have a much better grasp of the local intricacies.
That you're not just taking the application here and sending it off to, Fargo, North Dakota for someone in a warehouse to look at.
Exactly. There can be certain features of properties on the Cape that are hard for bigger box companies to wrap their head around. So
not only properties, but also profiles of the individual applicant, right?
Exactly.
I mean, on the Cape, a lot of self-employed, a lot of seasonal work opportunities that you guys understand and deal with on a daily basis.
Exactly. We're able to streamline that process a little bit more for the customer, knowing the seasonality of the business here, and we can make lending decisions based on that because we do control the funds that we're lending.
Okay. All right. So with you, what is that rewarding part? What do you do out there on an everyday basis that makes you want to get up and go to work?
Really, I think one of the most rewarding things is helping someone who didn't think that they could own a home obtain that goal and that dream. Working with customers to help them move past objections or common misconceptions to find a financing option for them is extremely rewarding. And when I talk to someone and they say, wow, I didn't think I could do this, and it seems so much more obtainable than what I had expected, that's really a great feeling to know that we're helping people invest in the community and become true Cape Codders as property owners and employees of Cape Cod businesses.
And where can people that may be thinking about buying a house or wanting to see what their options are find a loan officer at Cooperative Cape Cod, because you guys have a lot of them, right?
Exactly. We have branches all across the Cape, and we do have loan officers in those branches. A great place to start is either at your local branch or on our website, which is at www.mycapecodbank.com. People can apply online, or they can call a loan officer and meet them in person at the mortgage office closest to them.
Do I have to bank at Cooperative Cape Cod to get a loan from you guys?
You do not, but we always encourage people to bank with us because you can set up auto pay and it makes life nice and easy.
Absolutely. Thank you so much, Charlotte, for joining us, and we appreciate you taking the time to explain this, what can be a complicated process and definitely intimidating process to everyone.
Thank you, Ryan. I'm really happy to be here.
Thank you.